your home in a divorce. What do you need to do in order to keep your home instead of selling it as part of your divorce? I'm going to tell you that you have options, and yes, you can keep your home, buy your ex-spouse out, and continue on with your life. Hi there. My name is Ella Gurfinkel, Senior Loan Officer with 30 years of experience and over 2,000 families served over my lifetime. I'm here to tell you how you can actually stay in your home if you'd love to keep it in a divorce proceeding instead of having to sell it, split the proceeds, and have to go look for another home. So in the last year, I've actually had several transactions where I was helping divorcing couples to figure out how one of the divorcing spouses could stay in the home instead of trying to sell it. Let me tell you about a couple of those that were the most recent and what we did and how we were able to help achieve their goals. So check this out. Lady, a doctor, as a matter of fact, was coming out of not the friendliest of divorces. She was getting one of the homes and the ex-husband was getting the other home. As part of the deal, in her case, the ex-husband needed to be removed off of the mortgage so that she could take ownership of the home with a mortgage in her name only, and we only had 90 days to get that done from the date of final divorce from when the judge stamped it approved. Let me sidestep for a second and tell you that anytime there is a divorce situation and we're working with a refinance scenario to get one of the spouses off the loan, off the title, whatever the case may be, usually it's a finite length of time that we need to get this done in. Meaning the divorce decree will usually specify that the spouses have 30, 60, 90, 180 days to get to that point. Otherwise, they may be in contempt of the divorce decree and therefore in contempt of court, and more legal action can follow. So time is of the essence. Yes, I'm using a lot of legal terminology while not being an attorney, but it really is important that you understand that if you are going through the divorce and you only have so many days to actually do the financing transaction, those so many days really do have to be adhered to and really have to be followed, because otherwise, in some instances, if the divorce is not friendly, which most divorces aren't, there is hell to pay. So we only had 90 days. And this lady came to me actually probably on day 30 plus from when the divorce specified we had the 90 days to complete the deal. Now, the timing was not really an issue until almost the very end. But the bottom line was that we had to take somebody out of a lower interest rate loan with the ex on the mortgage and refinance them into a higher interest rate, unfortunately, because that was the rate environment at the time, and get a whole new mortgage in her name only for the house that she was getting to keep per the divorce decree. Again, that part was not the issue. The monthly payment necessarily was also not the issue as a result. What was of issue was a couple of things. One, she has tried that refinance with a couple of other financial institutions before coming to me, and those other financial institutions were trying to sell her on a much lower rate that would have cost her anywhere from $10,000 to almost $20,000 in cost just for the rate alone. And when you're talking a refinance, typically those costs get rolled into the loan. So let's say our loan amount was $500 with the additional costs, the loan amount would have been somewhere around $520K. So that's $20,000 extra that my client would have had to pay over time in interest. Lower interest, perhaps, but in interest nonetheless, that the client would have had to pay, again, over time, when we all know the rates are coming down and it makes sense to do another refinance down the pike when the interest rates drop. So there's no point to shell that much money out of pocket or dump into the loan and increase your loan balance by that much in order to get a short-term benefit of a lower interest rate. So that was thing one that we got to work on immediately. Thing two, and this is where a lot of the divorce situations get really, really trippy. We got the loan approved. We send our loan documents to escrow. My client signed the loan documents at escrow, but the title also needed to be transferred from the ex to my client. That's where things took a turn for the worse, essentially. The ex-husband, all of a sudden, started putting it off on coming in and signing the deed over. The ex-husband wanted to know more about the details of transaction, which frankly, as a mortgage professional, I can't share. We basically have the same privacy issues as a doctor would. We can't share your financial information with a third party unrelated to our transaction. Again, just like a doctor can't share your medical history with an unrelated third party unless you give them a release. Luckily, my escrow officer extraordinaire came to the rescue and actually told the ex-husband in no uncertain terms that she was driving to his office with the documents to sign. And no, he couldn't put it off any longer. And yes, he absolutely had to sign because there was a copy of the divorce decree that specified that he had to sign. We got it wrapped up, we got it done. And my client basically no longer has the ex in her hair or trying to get more money out of her, even though the divorce decree specified very clear terms of what he gets, what she gets, and who gets to keep what. Case in point, it takes a team effort. The divorces are not always friendly. Sometimes they're hella belligerent, and it takes a lot of kid gloves, hand-holding, and sometimes stern talking to in order to get that achieved. But yes, it can be done, and yes, you can hold on to your hard-earned property and get the ex out of your life for good, as we did for this gal. Here is another example for you. Client was going also through a pretty crazy divorce situation. She really wanted to stay in her townhouse. I mean, that's really all she wanted, was to keep the townhouse, to not have to sell and then move once or possibly twice, because really with what the parties would have gotten from the sale wouldn't have been really enough for her to get into a comparable space. And frankly, she would have had to rent for a while. So again, it would have entailed 2 moves. The sale, the rent, and then a potential buy down the pike, which frankly, not only is stressful as all get up, but also expensive too, because you're talking 2 moves, because you're talking first and last and security deposits on rent, and because then you're talking down payment on the new purchase. We came up with a solution on how to help her keep the home, buy the husband's interest in it out, and not have to move multiple times, and cherry on top, getting the ex out of her life for good in her situation as well. We used her income plus a co-signer, and we basically pulled half of the equity out that accumulated over their married life in the house to pay off the ex-husband. If they would have had to sell, they would have both ended up with that same chunk of money. In this case, we just pulled out the chunk of money that would have otherwise belonged to the ex, paid him off through escrow, through closing. He signed the deed over without giving anybody any grief in this case. But the bottom line is that the ex-wife got to stay in her home, preserve her memories there, preserve the happy moments, and not have to go through the expense and stress of selling, moving, and moving again. Now, if you are staring down the barrel of a potential divorce, not only talk to your attorneys, but also talk to a qualified mortgage professional. Of course, I would love for you to talk to me and see what your options are, because no, you don't always have to sell your home when divorcing. There are options where you can buy the ex out. When you're buying an ex-spouse out in a divorce refinance, it is not considered to be a cash out refinance by the mortgage standards. So you don't end up paying the extra interest rate bump that a cash out refinance would require. And in many cases, you can go above and beyond the 80% loan to value or 80% mortgage as compared to the value of the property limitation that's imposed on cash out refinances. Again, you have options. And if you want to look at the options, please reach out, schedule a time. The consultation is free. And if you need a shoulder to cry on, you got mine. If you need the moral support, I got it for you. And if you need a completely blunt opinion on whether you should keep the property, perhaps emotional or not, I will offer it to you. Thank you for watching. See you in the next one. And I'm always here for you, no matter what your financial situation is.